Hey, it's 4 o'clock. It is time, Jeff Santoro. It is time for the Investing Unscripted First Friday monthly live stream for the month of August. I want to point out that today is August 15th. Jeff, what does that mean?
Well, I mean, even if the calendar works out, anyway, this is certainly not the first Friday of the month.
No. But branding matters.
Mm-hmm.
And First Friday is just pretty awesome.
Yeah, and I don't think we've ever done a First Friday on a third Friday.
No.
We've done Second Friday is old news. First Friday on the second Friday of the month that's been there, done that.
We've even done First Friday
third
on
Friday.
Saturday.
That's innovation, my friend.
Oh, it is. It really is. We've raised the bar. We've raised the bar.
Yeah.
Of course, we did the First Friday that was on a Saturday. That one makes sense though. We were at Berkshire. It was after the annual meeting, which turned out to be a massive annual meeting, right?
Yeah. Big news.
Yeah. That was, somebody died.
Nobody died, Jason.
So, that's right.
That was the first time we went.
Right. Oh yeah, you're right. We killed Charlie.
Yeah.
We didn't kill Charlie. All right. We got people starting to show up. Jesse Merritt, see you there. Teo, John Denley. That's awesome. John says, I like that you guys keep expanding the definition. That's language. That's how language evolves over time.
Look, man,
even presidents do this, Jeff.
Yeah.
Right.
But we're nothing if we're not innovative. I mean,
Yeah.
Just constant innovation on this one thing.
Bucket loads of innovation on being able to redefine what the word first and the word Friday mean.
Yes. I wonder if we'll ever do a fourth or fifth Friday. We'll see. Time will tell.
Come on now. Whoa. Hey, let people get used to this, okay?
So here's the question. I haven't even looked ahead. When will the September first Friday be? Are we back on schedule? Are we available?
Like we're going to look at that before I don't know, late August.
It'll be like Wednesday of that week and we'll both be like, oh man, it's the first week of the month. We should probably do a live show this Friday.
Love it. So John Dargan jumping in here says, I'm waiting for the final Friday. Oh, buddy, everybody's waiting for that. I don't know if the world's going to survive. Well, they won't have to because it'll be the final Friday, right?
Right. Yeah.
Yep.
Well, this show has started off absolutely ridiculously.
It's ridiculously well, if you ask me. Third for the month, first in our hearts. Thank you, John Denley. Andrew
Beautiful.
Hardaway joining us. Hey, guys. Andrew, hey to you too. This is great. It's good to see we got people joining us. Hey, what's on tap today, Jeff?
All right. I want to start with a question for you because I've had a little bit of a busy week. There are certain weeks in my day job life where I just really can't get my head into anything in the news or investing because I'm swamped all day. And this was that week. So I've followed markets and investing news as much as I can, but I don't really have my finger on the pulse like I would normally as the voice of the people. But we often start the first Friday conversation with market vibes, right?
Mm-hmm.
Like, how are we thinking about the market? How are things looking? What is our mindset? I know for me, I actually bought and sold a couple things over the past couple weeks, even as the market is still, in my opinion, overvalued and frothy and bubbly and feeling more and more like 2021 as I read about meme stocks and crypto coins and things like that. But it does feel like we are simultaneously starting to get economic data that is a little more concerning for future market performance. But at the same time, I don't know how much of it we can believe or trust at this point, which is a thing I hoped I would never have to say. But you, as someone who does this all day for a living, I'm just curious, like where your head's at. What are your market vibes as we hit the third Friday of the month?
So this is something for people that have listened to the podcast, and by the way, happy third anniversary to us, Jeff. We're at the 3-year mark right now.
Yeah, we actually passed it. I think the first show was the first couple days of August.
August 4th, maybe?
Yeah, it was a single digit.
Yeah.
You know that.
Yeah.
It was within the first week of August in 2022. Yeah, I forgot. Happy anniversary, my friend. 3 years.
So, but this is something we've talked about a lot when we have our mindset shows and we talk about building our toolboxes and thinking about frameworks and that sort of thing. Is how wired I am. I think every year we've done the Reckless Prediction show every year, And every year, one of my predictions that we're going to have a downturn. We're going to probably have a recession. Like I always think that's going to happen next year. Every year, I always do. But I also know math well enough to know that statistically, it's extremely improbable that it's actually going to happen. So here we are at all-time highs, near all-time highs. I don't know if the S&P and NASDAQ are at all-time highs. I think the Dow finally hit a high again today. I think it closed at a high again today. So we're basically there. We're at or near highs. And there's always reasons to expect, the market to turn south. One of the things that I've noticed in a lot of companies that I've looked at earnings for the day job, if you look at retail, you look at fast food, fast casual comps, it's an important metric. It's the metric that looks at sales that exist at locations that have been open at least a year, right? So you're comparing it to like a true year over year for that location. So you're looking at just that bucket. So it ignores any new stores or locations that you've opened or acquired, right? And you look at that comps result across those important consumer discretionary driven industries, and comps are broadly very weak, down to flat. There's not a lot of success stories with companies that are showing positive comps, and the ones that are showing positive comps, for the most part, not all of them. Like McDonald's had a good quarter, for example. The comps are almost 4%. Even the ones that are showing positive comps, a lot of them they're missing expectations, with very few exceptions. TJX Companies is doing well, but like you're just not seeing it. So that to me says, hey guys, the consumer is feeling it.
Yeah.
And we still haven't really fully felt like the boot of inflation on the throat of the consumer. We haven't. So those things make me anxious about what could happen, because the market, we went through that downturn in April after Liberation Day. I can't remember which of our Patreon subscribers in the first Friday right after that happened said that they felt very much liberated of a portion of their portfolio value after that.
Yeah. The
market fell almost 20%. So maybe that's the sell-off, that it's already happened. The market usually does bottom before whatever the bottom is for the economy. And I'm trying to remember that. I'm focusing on my financial goals and not acting based on my brain's wiring. Not in big meaningful ways, because it's dumb to do that most of the time.
Yeah.
Because you're usually acting out of line with how the market usually works and the economy usually works, and not in your own financial best interests. What about you?
I'm trying to balance in my head what I would say the majority of people that I read and listen to who know about the economy say and think about what they think will happen. And I'm not talking about MSNBC talking heads. It's more, people who go on Odd Lots podcast, or things that like Matt Levine writes about in the Money Stuff newsletter, things like that. People we talk to just that we know. And it seems like the consensus is like, yeah, at some point this should probably hit the economy, right? Now, the question I think that is still out there is, and no one's using the word transitory anymore because it's become like a bad word with inflation and things, but I'm of the opinion we're going to feel it down the road. And maybe these reports you were just talking, or these metrics you were just talking about consumer spending in restaurants, is like the canary in the coal mine.
Yeah.
But what I don't know is it a short-term depression, and that we sort of, not depression like the Great Depression, but like a short-term depression of spending that we kind of normalize from, and then it just is like, okay, here's the new normal? Or does it precipitate a much longer, more drawn out slowdown in the economy, which would have obviously all sorts of knock-on effects with stocks and investing and things we talk about here on the show. That's the piece I don't know. Now, I'm on record in multiple places saying I'm convinced that we're going to see a downturn in the second half of the year. So, and then every time there's a CPI report or a PPI report or a jobs report or any other metric that comes out, I'm like, well, not yet. We're still wrong. But I mean, the the tariffs have raised prices. At some point, businesses are going to the degree they're already eating that, are going to start passing it along. And, and the last thing I'll say about it is, back before the election, I have some conservative, right-leaning older relatives, like generation above me, who were constantly on the, I can't believe how expensive it is to go out to eat, which I understand is true. Like, data would tell us that, but I also know that they are like avid watchers of media that would suggest that and pound that into your head, whether it's true or not. Right. But now, like this week, I was around people more my age, my generation, who are well-to-do, like not the kind of people that would have to pull back on restaurant spending when prices go up, who are saying things like, I can't believe how expensive it is to go out to eat now. So, I could dismiss one as some combination of truth and where you get your news. But the more recent anecdotal evidence has me thinking like, okay, I think if this group of people is like noticing this, and again, these are people who could easily not notice because they're wealthy enough, not wealthy like driving Lamborghinis, but well-to-do enough that they can still go out to dinner. It's fine.
Yeah.
But now think about all the people for whom like going out to dinner once or twice a month is like something you save for, like we were in our 20s, I remember like counting the pizza nights we had each month to make sure we could like make it through. So that's just a bunch of like anecdotal stuff, but it does make me wonder, like with every week and month that goes by, is it just going to get a little harder for people? Are they going to spend a little less? Does Q3 look a little bit worse than Q2 did in terms of the consumer sentiment indicators that come through in earnings season? But that's just sort of how I'm thinking about it. Now it has not changed how I invest yet. Like I still feel like I feel the same about what stocks to buy and the valuations I'm seeing as I did for this whole year. Like I've not seen any significant discounting yet. Still, like I said, still seems kind of crazy out there. But curious for the viewers who are here live with us, throw in the chat how you're thinking about just the economic environment generally. See if we get any conflicting points of view here.
So a couple of things that I think are very, very notable. This is apropos of nothing we've talked about so far, but Jen
Par
Roberts,
for the course.
Yeah, it is. But Jen Roberts kind of brought it to mind. Jeff, before the show, you and I were both talking about how exhausted we are with so many things going on in our personal and professional lives, and that kind of stuff. And then Jen says, I've been listening to you guys babble for 3 years. No wonder I'm always exhausted.
Yeah.
Jeff, maybe we're the reason we're exhausted.
I have talked a lot more in the last 3 years than I did probably in the 3 years before that. I mean that, look, I know she's just busting our chops, but like it does bring up a good
probably
point.
being honest and busting our chops.
Yes, both of those things.
Yes.
But man, it is exhausting to just pay attention to the world generally right now.
Yeah, it's true. It's true.
But even with markets, I've been paying very close attention to investing in stocks for 5 years now. And the last 6 months feels more exhausting than the previous four and a half years.
Yeah.
Just the pace of news, the way it impacts things, just been wild.
Well, and it's certainly become so much more intertwined with politics, right? And that's everything it feels like, and that makes it feel bigger and more exhausting.
Okay, speaking of politics,
we're providing excellent counter programming right now for people that are watching us live. LDP, thank you for pointing that out.
Yeah. I would honestly, I feel good. Like if someone had said that they would prefer to watch Trump and Putin talk over us, I think that would be a bearish signal for our podcast futures.
Yeah. I was going to do my best Trump impersonation, but I'm just not going to do that right now. Andrew,
I don't think you have a great one. I got to be honest. Like I've seen some good ones. I don't know where yours ranks.
Okay. I'm not even going to try that. That's fine. I almost started again and I stopped myself. People say it's very good.
Okay, so let's pivot to something that is similar but different. We do this once a month.
Before you do that, I do want to address Andrew's comment, because I think it's key, because it's right in the middle of this, and I think he wrote it maybe better than we've said it so far. I'm also struggling to balance my political bias while filtering real economic numbers, hopefully real, that's another layer of complexity that's been added on top of things right there. But it is important to, as investors to try to focus on the data as much as we can and be objective while acknowledging our bias. It's not just political bias. It's every time you make an investing decision, you start to establish some bias. We're going to talk about some of the companies that have reported earnings. We've talked about in recent episodes of the podcast, getting into things like, when is a thesis broken? There's an element of bias. As soon as you buy a company, immediately you're building a belief system around that company's success, and you're building bias that is hard as hell to overcome if things are not going swimmingly. So it's bigger than just politics. That bias invades every aspect of our lives.
Yeah. And you mentioned we're going to talk about companies, and that's where I wanted to go next, which is tied to this, right? Because we do these live shows once a month, and we have some themes we come back to. Like, we'll talk about the portfolio contest for a few minutes later in the hour. But one of the things we do when the month is part of earnings season is talk about earnings, right? So the last time we did a show was before we were really into the depth of earnings season. So now we're almost out of it, right? Most of the big companies have reported. We still have like some big ones, like CrowdStrike still is to come, NVIDIA is still to come. But most of my portfolio, Jason, has reported by now. So I never wrote this down like to remember back, but like it did feel like this quarter in particular had more huge moves after earnings than is normal. I had more plus 20s, negative 30s after earnings, I feel like, in Q2 of this year than I have in the past. So let's talk through maybe a couple notable earnings that we have been thinking about, you and I, and hopefully anyone here who is here live with us. I'd love to hear like which earnings report stuck out to you and for what reasons. So where do you want to start? What's one that pops to your head right away in terms of this earnings season?
Well, the first one that comes to mind, and I'm bringing this up because it is a big one, but also it's a perfect opportunity to shill our Patreon starter plan, starter position membership for $5 a month. You get the podcast episodes with much fewer ads, and you also get our Discord. But on that Discord, we talked a lot about the trade desk, and for good reason. This is a winner. It's a bit of a category killer in the programmatic ads on the buy side, right? Supporting the advertisers and ad agencies. But twice this year, we've seen a big letdown from the growth rates and the expectations. And the stock kind of looks like it's still expensive, but I do think it's gotten a little bit more compelling. But at the same time, it's clearly going to take some time for the whole story of the transition from Solimar to Kokai to really fully play out. And there's more competition. We know that. But we also saw, what is the sell side? Pubmatic?
Yeah.
That just reported their stock got absolutely slaughtered. And maybe kind of a little bit like what I was talking about with like the restaurants and retail and the stuff where we're seeing like just the numbers are down on the consumer. Maybe advertisers are starting to step back as we hear from more and more of those companies. We get a little bit clearer picture, but at the same time, the social media companies, their results, Meta's results were really, really good. So the evidence is less clear that there's problems with the ad market, or if it's just there's little pockets, and we have maybe some companies that are in areas on the technology side that they're the ones that are struggling the most.
Yeah, one of the things I want to do now that earnings season has slowed down and my personal life schedule will start to wind down and be a little bit more manageable for a couple of weeks here before it kicks back up again. But just kind of broadly, I mean, you and I have talked about this before. I do most of my reviewing and thinking about quarterly reports in like the 3 or 4 weeks before the next earnings season. Like, because it just takes a while to like get through every 10Q and listen to every earnings call. And one of the things I want to do as it relates to the trade desk is learn a little bit more and educate myself more about this whole programmatic ad market. I don't feel like I have a super deep understanding of it. And the reason I want to make sure I learn a little more is when we had the drop 2 quarters ago with the trade desk, I was very bullish. I was of the opinion that, okay, great. This wonderful run they've had of never missing their own guidance and always beat and raised is broken. Everyone stubs their toe. I think they'll be fine. And the next quarter made me feel a little better. Like there was not that same reaction. And then this quarter, obviously, kind of 2 steps forward or 1 step forward, 2 steps back. The thing I don't know that I have a grasp of yet is if the trade desk got disrupted or had competition rise more quickly and be more successful and take share from them more quickly than I think the biggest fans of the company might be ready to admit. I don't know what that would look like, if I'm being perfectly honest. I don't have enough of an understanding of the industry. I have to really think every time I say buy side or sell side, I have to do math in my head to remember which is which. I just can't wrap my head around it. So that's one of my personal goals between now and the next time the trade desk reports is I want to have a much better understanding of that industry. Yeah. Because that's what I wonder about, right? You keep hearing, like you said, the social media companies, which is always the comparison that Jeff Green, the CEO of the trade desk, always makes. He always holds up the trade desk against the walled gardens.
Right.
But if the walled gardens are doing well and the alternative is struggling, that's something I want to look into. And then, there's other places where people can get ads displayed on streaming TV. You don't have to come through the trade desk. So I just want to understand the industry better, where the other businesses are, where the competition is. That's what's holding me back from, because man, it is a buying opportunity if you are bullish on this company. I mean, it has gotten crushed.
So you say that it still trades for 65 times earnings. So it's still,
you've never seen it. Again, I said, if you're bullish about this company, this is the cheapest it's been.
Yeah, I agree.
Right.
I agree. But
I'm not saying it can't go lower. I'm just saying if you really do believe and you know the industry already, if you already know the things I'm trying to learn, I could understand wanting to back up the truck here because you have high confidence that this is just a short-term concern.
Yeah. Well, it's so funny. I'm going to, before I continue this conversation, I just want to ask for everybody watching. I've been trying to do better about this. If you can, if you're watching live, give a like to the stream. That helps the algorithm a little bit on YouTube, and it'll help more people find us. And we won't ask for your money quite as much. Or
I just liked the stream while you said that, Jason.
That's awesome. I should do that too.
Okay. Well, but you should talk instead because they're here to
talk
listen.
Instead. That's exactly right. But I think the key is, and we talk about how bad and disappointing the quarter was for the trade desk. They grew revenue 20% and increased earnings per share. Right? It's not like revenue fell 25%, but that context, because that's how high the bar has been for the expectations of what.
Right, but they're guiding for 9% revenue growth. That's the bigger concern to me.
Yeah. Revenue growth is slowing. Right. Yeah. No, that's exactly right. Oh, look, we got snooze button Ben from our Patreon here too. It's been good to see you on the live stream. John Gallegos joining us. Could we like the stream but complain about the delay and being the third week? Yes, you can absolutely do both of those. We will appreciate one. We will ignore the other. So
no, Jason, that is not true. Hold on, John. You're welcome to complain. Here's how you do it. Open up Apple Podcasts.
That's right.
You give a 5-star review.
We have a process for complaints.
Right. Apple Podcast, 5-star review. In the review, put your complaint. As long as it comes around with 5 stars, we will listen to it. And then go to Spotify. Also give us a 5-star rating.
You have to do both. You have to do both.
You have to do both. It's a 2-step process.
Yeah.
All right, folks. If you're a regular listener to Investing Unscripted, then you know that we use Fiscal.ai, formerly known as FinChat, daily. Fiscal.ai is our complete stock research terminal. It's where we have our investment dashboards. It's where we create financial charts. It's where we read all the transcripts for the conference calls, sell-side events, shareholder meetings, and it has Morningstar's high-quality research reports on more than 1,700 companies. It really is the complete research platform for stock-focused investors. If you use our link, fiscal.ai/unscripted, you will get an automatic 2 weeks of Fiscal Pro for free. And if you find that it's worth upgrading, you will get 15% off any paid plan with that link. Again, that's fiscal.ai/unscripted. The link will be in the show notes.
Hey listeners, my name is Brett Schaefer, one of the hosts of the Chit Chat Stocks Podcast. On our show, we do comprehensive stock research reports, interview analysts, and learn from great investors. And we have coverage on stocks like Airbnb, Nubank, Mercado Libre, and many others. Plus, we cover all the hot financial news on our weekly investing power hours. We have episodes for all types of investors, and think if you listen to this podcast, you will enjoy ours as well. Follow the Chit Chat Stocks Podcast on YouTube, Spotify, or Apple Podcasts, and start discovering new investments today.
All right, so we talked trade desk. What
Let us know
what
when
else?
you're done, John. We'll still be here.
What else stuck out to you? I have a couple too, but I'm curious if there was any others that you had in mind.
Yeah, so I'll talk about Confluent for a little bit because this is a company that I've talked about a lot in kind of fits and starts over the past few years. And generally when I get quiet with Confluent is when the stock has done extremely well. It's gone up a bunch. And I don't really say much about it.
Is that why you haven't been quiet about it?
No, Confluent stock has crashed. You know, absolutely got blasted at earnings. I was on vacation. Had a lot of other things going on. So I
was gonna bust your chops about it, but I knew you were away, and I was like, "Now let me not ruin his vacation," because I think it was like 35% drop or something.
I just would have ignored you. I just would have ignored
you
you.
don't have to be on vacation for that.
Yeah, yeah. So I need to look and see. I think when I was gone, this is the one company that I actually set up some options on. I'm pretty sure I built a synthetic long on it. The pricing got weird, and it's a situation where like the outcome of the synthetic long, I will probably be able to buy shares from those options because of the income that I got on the puts that would be lower than the day that I set up the synthetic long. Of course, if the stock continues to fall, it still won't work out as a profitable move. But it was just one of those weird things where the market was very, very bearish and the premiums were just really favorable to do it. So here's the bottom line. Revenue growth rates are slowing. And one of the things that happened was a large customer switching from Confluent Cloud to their on-premises Confluent. And the difference is that Confluent manages all of that. So it's a lot more revenue. The on-premises, the customer runs it. So the money that Confluent gets for the software is a lot lower. This is the second time we've seen that happen in the past year and a half. Revenue growth rate slowed last time and then it reaccelerated, and we're seeing it happen again. I think revenue growth is going to reaccelerate again later this year as they kind of work past this with this individual customer. It's just a reminder of how small the business is, and they do have some concentration to some large users. Also, they kind of backed up on guidance a little bit, and investors seem like they're really worried about AI. And I think it's so strange because I think AI is not going to be bad for data streaming tools. It's not going to you don't just go tell Chat GPT, find all of my data sources in the company and build a streaming tool. It's not like that's not going to happen. I think these streaming tools are going to unlock more companies' maximization of using AI in analytics and in real-time data decision making. So I think AI is going to end up being really, really good for Confluent. The market just doesn't agree. The stock price, again, I know I'm saying this so Tyler Crow rolls his eyes when he listens to it, but it trades for 5.5 times sales. You look at the cash flow metrics, they're fine. The margins are really, really good. They're still trying to grow into earnings and GAAP earnings, and the cash flows are pretty neutral at this point, so the business can live in its own balance sheet. That 5.5 times sales is offset to a certain extent by their stock-based compensation, which we're still, a year and a half away from before it normalizes. But that's just crazy cheap for a good SaaS company. And it's just gotten really, really compelling to me again.
So John's busting my chops again about Outset Medical.
Right on time, John.
But
Great
John,
segue.
I'm going to talk about Outset Medical because it is an earnings report that stuck out to me. So we're going to do it. Listen, this company could still go to zero. I don't know what it will take for it to actually.
No, it'll get acquired before it goes to zero.
Yeah, probably. But here
But
again,
for
like
50%
seriously,
less than today's stock price.
but if probably, if you take all of the previous knowledge away and you look at the fact that it was the fifth quarter in a row, revenue growth accelerated. 2 years ago, net loss of 44 million, a year ago, 35 million, this quarter, 19 million, right? Progress, step in the right direction. The smallest free cash flow loss ever. Gross margin 2 years ago was 21%. A year ago, 36%. This year, 38%. Right? Like operating expenses were 142% of revenue 2 years ago, 148 a year ago. So a little bit of a slip, but only 87% this quarter. Like it is slow. It is not profitable. It is not generating cash. They only report their total installed base metrics and how many home and acute installs they have at the year end. So we won't really know like the growth of the sales of the consoles themselves until they report in February for the December quarter. But it's still doing, we've talked a lot the last couple episodes, Jason, about thesis is changing and when to bail on something, when to hold on to it. And we talk about like, what's the thesis and what are the metrics you use to track said thesis? And those metrics are still heading in the right direction. It does not mean this will work out, but I am intrigued enough to hold on and see, even as my position is down 95%.
I like John's comment here, John Gargas. We got so many Johns.
Too many Johns. Someone's got to change their name.
I mean, I guess it just means we're full of a lot of crap if we've got this many Johns. So, all right, John. So John wrote, I own a good amount of Outset as well. Leaving it in my account just to remind how easy it is to like the story first. And I love that because what I found with those story stocks, that the story's great, and it's a couple things, right? Because with Outset, with their product, I mean, this can change millions of people's lives for the better, their products. Because, the whole process of having to go in to have, what are they called, Jeff?
The name of the machine?
No, the treatments.
Dialysis.
Thank you. Yeah. It's brutal. It's brutal. It's not just an
laughing at you, not
inconvenience.
dialysis.
What's that? Yeah.
I'm laughing at you, not at dialysis.
Right. Fair. But if it's not just the inconvenience of having to go and the hours that you're there to do it, it is physically exhausting.
Yeah.
To go through it. Being able to give people back a massive portion of their life, they still have to go through dialysis, but being able to do it at home, being able to travel with the machine, just all of those things are so that part of the story is really exciting. The other part of the story is just the growth opportunity is also really exciting, right? And falling for those stories is easy to do. And this is one of the things that I've learned, that position sizing is so important, because you can get just a tiny bit of exposure about these stories when they're still really speculative. And if you find out somebody was just feeding you a great line and converting you to a bag holder, you just have a very tiny bag of garbage, right? That you bought for gold prices. So, and then if you miss, and it does turn out to be a great story, you buy a little bit more and you pay a higher price, but you hedge your risk that way. And then for the ones like Outset, where things just didn't work out initially, and it's one of those, hey, change is really hard kind of businesses, and it just takes time for the story to play out. You can avoid some of the early pain while still seeing a great story that's starting to turn the page into a really good business.
Yeah. And I positioned this correctly. I mean, it is 0.1% of my portfolio on cost basis, right? So like
you've certainly talked about it at a much like larger position size of your communication.
So two things. When I spent that money, it was very early on in building my stock portfolio.
It was a larger percentage of your investing portfolio at the time.
But also, I probably wouldn't have even put that much in if I was a more seasoned investor. I might not even have bought the stock if I was a more seasoned investor, if I'm being honest. Yeah. So, similar to what John said, I do, at this point, I just feel like I can never get rid of it. It's too fun to talk about and have my chops busted about it. but it will live in my portfolio and in my brain for the same, to serve the same lesson as what John said, which is, the story's great. Make sure the numbers are there too. To be fair, for a while, the numbers were there. It's really when they had that FDA recall they voluntarily recalled their device because of an FDA letter, that they started to hit the skids. So we'll see. I agree with you. It's probably more likely it just gets acquired by someone. It feels like the technology works well enough and has FDA approval and people like it and it's doing good things. I don't think the company's going to go away. But does it just live as part of some other business or just go private? Maybe.
LDP dropped in a comment about UnitedHealth. Want to take that real quick. So UnitedHealth in the recent purchase of several major players, do you think they were pushed because of their losses they have made so far with the company? Or do they see value? I want to start with the one that I just saw. Berkshire's 13F came out, and I've actually got it open here. On Whale Wisdom, was it confirmed for sure that Berkshire bought? It was. It was on their. That's right. It was one of their larger investments, about $1.5 billion of shares that they bought. Berkshire did not.
Michael Berry bought a bunch of it too.
Yeah, but Berkshire did not own any. They owned it like 15 years ago. And at Berkshire, Buffett exited a lot of insurance companies kind of during that same like post-financial crisis period. And this was one. So I think this is just, and I haven't seen any commentary out of Berkshire, just the SEC filing. So, I mean, it's easy to make assumptions that this is Buffett that's doing it. And it probably is. He's certainly probably aware of it. I think this is just a deep value play on a really, really important company to healthcare in the U.S. That probably is not going to generate the kind of returns we've seen it generate in the past. They had already started making some changes after the CEO of, and again, it wasn't the CEO of UnitedHealth Group who was murdered. It was the CEO of the United Healthcare business, that part of the business, who was murdered. But they had actually implemented some changes already around response to claims and trying to make that process better and more efficient and less running into a brick wall. And I do think that it's a business that's going to have to be a lot more aware and mindful of actually paying for people's healthcare. And that's going to take a bite out of returns. That's just the way it's going to go. But I do think that there is some decent, interesting value opportunity there. I don't think anybody that bought it based on the fact that they'd already bought any of the big investors. I don't think anybody's buying the dip because they own shares that they had a loss on already. I think investors see a big company that's a very important company that's making a lot of important changes, trading for a really, really reasonable valuation in an expensive market.
Yeah, and we don't know what price Berkshire paid for it, right? This is just purchases that were made in the second quarter. So they could have paid less than for what is trading now. I don't know what the stock has done over the course of the quarter. But so one thing I'll just add to this, because I don't follow the company UnitedHealthcare at all, but I will say this, having read Alex Morris's book, Buffett and Munger Unplugged, and Alex may be listening. I think he's a lurker on our live shows. If you're listening, what's up, Alex? But having read his book, and there's a lot of words in that book, tiny font. But the amount of time, so you hear Buffett and Munger say constantly, like one of like the well-worn words of wisdom you hear from them is buy what you know, stick within your circle of competence. And that really gets driven home when you read multiple decades worth of what they've said about various topics at the meetings. And the amount of times insurance came up, whether it was in like a chapter of the book devoted to insurance or just other topics where they veered into insurance, it has to be the sector they talked the most about over the course of the 30 years that Alex, went through to make the book. So when I see the 13Fs come out and Berkshire buys anything in insurance, I'm like, yep, nope, that makes sense. Like my assumption is they have their eye on every big important insurance company and just wait for the right price. But that's kind of my working assumption here, because they buy the things they know. They buy oil companies, they buy insurance companies, they buy banks. The Apple thing and Snowflake at the IPO, like those are, exceptions to the rule and probably driven by Todd and Ted and not Warren or Charlie. So didn't surprise me that it was in the 13F. And it's just, without even looking, it just made me assume it must have been pretty well or pretty nicely valued sometime in the second quarter.
So we got a bunch of comments and questions that have come in that I want to get to, but I don't want to run out of time. And we owe everybody an update on the portfolio contest, Jeff.
Yeah, let's do that for just a few minutes, then we can shoot back into comments. So because I don't track it monthly, like in terms of writing down where everyone's been, it feels to me like it's been fairly steady over the past quarter in terms of like the past month in terms of where people were at the end of July versus the end of June versus the end of July. But you're finally in positive territory. I think you were last month too. You're up 8%.
Yeah, it's up about 8%. Yeah,
I'm up 12%. I'm just going to point out that that's a higher number.
That's true. Both of our numbers are higher than Tyler's.
Yeah. Now, to be fair, I've not updated the 3 stocks of Tyler's that I have to do manually.
Stuff that you have to manually update.
Yeah, he's got 3 that I have to manually update because he's difficult.
South Dakota Soybean Processors LLC.
Yep.
Yeah.
Mm-hmm. Yeah, that's where we are with him.
Is that the one that you have to call like a landline to a phone in South Dakota? Like you can't even use your cell phone to do it. Like you actually have to find a landline to call that landline.
So oddly enough, the soybean company actually will update on its own from Google Finance.
Oh, that's great. That's good.
It's
awesome.
It's Bone Support Holdings and a Mexican company that I don't even know what it does, and Concar, which is another foreign company. Those are the 3 I have to do manually.
Got it.
So anyway, I'm not going to update his. Tyler's still losing to us, and he will be until I update the sheet. The portfolio that's made a nice comeback over the course of the year, and I'm surprised because it's the one that I thought would crush us, was Nick and Casey's chip stock portfolio. That is now ahead of you and slightly behind me, but only onsemi and Pure Storage are in the red for them now. Everything else has shifted green, which I would have not guessed. I would have guessed at the beginning of the year that would have been a runaway market crushing portfolio. So that's an interesting one. Nothing that really jumps out to me as super noteworthy on the side of the portfolio stuff that is our audience members. I see a couple Redfins that I've been neglecting updating here now that they've been taken over by Rocket. So I'll have to do that. But again, I'll say it again because I don't know if everyone listens to every episode. If you have a portfolio in our contest, it is on you to make sure that what is on our spreadsheet is correct, because this is a lot. And stocks split and companies go private. And I don't always know that because some of these companies are ones that I don't follow at all. So
you're definitely going to need to update Lance's with the takeout price for Redfin.
Yeah, no, there's several Redfin ones I have to catch up on.
Yeah.
I just so everyone knows, I do a thorough going through as we get to the end of the quarters. But doing it, doing that 4 times a month a year is tough.
I want to say this.
Yeah.
One of my favorite things about the Investing Unscripted podcast is we have put a tremendous amount of focus into trying to help people find the tools to be better investors and to do better for themselves. And we have clear, measurable evidence in the performance of their portfolios in the 2025 Investing Unscripted contest. You people are killing it. You're doing so well. I mean, I'm intentionally sandbagging mine because I want them to revisionist history is happening in real time here, people.
Oh, you're so full of crap. I love it.
It's impressive. It's impressive. And what I can't wait is next year for all you people to screw it up and have false confidence.
I agree with you in terms of it's fun to watch. I also, now that we are, halfway through 2025, and our first contest was 2 years ago, right? 2023, I think is the first time we did this.
That's correct. Yeah.
And you can go back. These are always in our show notes. If anyone's new, you can check out all 3 years worth of portfolio contests. Again, I don't go back and update 23 and 24. So if you see a mistake, feel free to email the show and let me know. But it, a 1-year contest, we've said ever since we started doing this, is for fun and for conversation, right? We're not here to tell you if you do well over 1 year, you're the world's greatest investor.
Fun conversation and to throw some money at some worthy charities.
And for the charities, yep, exactly.
Yep.
But now, now that at the end of 2025, that first portfolio will be 2 years old, right? And I think that's a little bit of a better indication. And every year that passes, obviously each portfolio will have another year of maturity under their belts. So it'll be fun to watch these over time. And I just want to point out quickly, the unportfolio, where I clearly misunderstood the task from 2 years ago, is still crushing it, just absolutely crushing the market. The two stocks I picked to be the worst are maybe the two best stocks of that year. So,
well, there's no doubt Meta is. Meta stock is up 6.5 times.
Yeah.
It's up 552%.
Yeah. Screwed that one up.
Yeah. Well, and Team Jason's portfolio is only done 8 times better than Team Jeff. Long term. It's about the long term.
Always bringing up old stuff. All right, let's get into comments here. Right. So John's got a comment here about it came in after we started talking about UnitedHealth. My tobacco basket has been on fire this past year. BTI, that's British Tobacco, Altria, TPB is Turning Point Brands, I believe. I know most of you don't like the industry, and frankly, other than cigars, neither do I. I gotta say, I was listening to a conversation on the Motley Fool Money podcast about tobacco stocks the other day, and the bull argument that these alternatives to cigarette products, right, the Zins and the vapes and all that kind of stuff.
Yeah, and that's Turning Point's core business, by the way.
Right, but like that market and the fact that this is still, these companies are protected by regulation. They're like, there will not be competitors to them, and they all have like plus, 5% plus, 6% plus dividend yields. I don't know, like the dividend yields alone, and the fact that they still sell as an addictive product that people enjoy partaking in. Mm-hmm. I'll never buy them. I just don't want to. But like, I can understand why people want to go there, and they still, I think, fall into that bucket of, fishing where people don't want to fish.
Yeah, I'll never pass moral judgment on John or anybody else that owns these. I'll
pass it on John, but not anyone else.
Well, I won't pass moral judgment on John. I'll pass judgment on John. Yeah,
I pass all judgment, moral and not.
That's fine. Ken Taylor, love this, and I especially love John Denley's response. Ken Taylor weighing in, meme stocks have pulled back recently. Is this an opportunity? And John Denley replies, to make a meme? That's good. Yeah, I think Ken's baiting us. I think he was baiting us there.
Well, yeah, I mean, it is interesting now. Any stock can at least momentarily become a meme stock.
Yeah.
Right. Like it's just we're just in a different world. Like we just have to kind of accept it, I guess. It's just there will be stocks that retail investors collectively decide will go up, and then we just have to follow along. I've not been, I don't know, lucky or unlucky, I guess is how you want to look at it, that just to have any of the stocks I own get caught up in any of this craziness. So I don't know how I'd handle it. But yeah, what was the one? There was one recently that there was the one that Abercrombie and Fitch went crazy after like Trump praised that Sydney Sweeney ad, right? Like that popped that one day. But there's been a couple others, like not the normal AMC, GameStop ones that have come up recently. So yeah, I guess it's just the world we live in.
Yeah, no, I think so. LDP points out QuantumScape in his portfolio has done a lot of heavy lifting. That's a stock that's done extraordinarily well. I remember when it was in the 4s, and I was actually adding it in the 4s. It's still hugely risky investment. It's stocks up to, I think it's in the 9s now still. Just got over $12 a share, I think, for a little bit there. But it's still well below like where it was back after the SPAC happened in 2020 or early 2021. Still well below that. But I mean, it was worth more than like Ford and Volkswagen for a while. But you look at the steps that they're making. This just real quick, since we were talking earnings earlier, this is one that I think was extraordinarily impressive to me. Even though the market reacted pretty negatively about it, they expanded their joint venture with Volkswagen to allow VW to do a larger volume under their licensing agreement. They announced that they've started a joint venture with another OEM, still unnamed. That industry is so like protective of competition, that kind of thing. So they're unnamed, but they've got another OEM that wants to do the same thing, where they're going to fund most of the manufacturing and take the technology and license it. And neither of those deals are exclusive. So that means that QuantumScape can still completely controls its own future. If we start seeing commercialization, their access to capital is going to be perfectly fine to be able to build their own manufacturing if they want to they take on the capital risk, but they get all the profits if they do that. But I think the market saw those expanded JVs, and also part of the VW expansion allows Volkswagen to actually sell into the market a certain amount of the production. And I think a lot of investors thought that QuantumScape was giving away too much, or maybe just had some capital weakness. I think it's just too early in the story. And my guess is VW used a little bit of leverage and said, hey, we want to expand the agreement, but we want a little bit of a something more too. Mm-hmm. And we want to be able to sell into the market. So I think QuantumScape did really, really, really well.
I've come close a couple times in the past month or so to starting a position because I really want this. But back to our conversation about story stocks, I really want this company to succeed, even with the fact that it will absolutely destroy the resale value of my electric car if they come to market with solid state batteries. I love EVs so much that I want this. Like, I want this for the industry. I want this for EVs writ large. All right, Jason, I want you to talk about Enphase in a minute because that's a question we got here. But I want to briefly throw this out to you and also the audience because I've talked recently about being really conflicted with Airbnb, just going back to like earnings that have stuck out to me. And I go back and forth between the bull case of this is a go-to like verb brand, right? Like if you're going to travel somewhere, you're staying in a hotel or you're staying in an Airbnb. And for some people, they are diehard. It's always going to be an Airbnb. For other people like me, and I think like you, it really is situation dependent, right? Sometimes an Airbnb makes sense, sometimes a hotel. I don't really worry about the regulation aspect. It seems like they're able to get around those types of things over time. But then on the other side, I think to myself, maybe this will just be a great company that's never a great investment. It came to the markets big already, right? I think it was, that it's a poster child for like, oh man, if this would have come public at 100 million market cap, what growth would we have seen as public investors? I do worry that like, maybe it's just kind of a slow grower and doesn't really return for investors like it should. And I've said on the podcast that I get a little bit of ick from the CEO. He's a little too foundery for me. His vibes, founder vibes, I don't really love them. However, I listened to the earnings call because I always listen to that one because again, I get weird vibes. I got to tell you, if they do a good job, I think, of laying out what they see their path as being, and some of it, you have to take with a grain of salt. There's always some spin that they're going to throw at you, right? They're trying to sell the best vision of their company. But some of the things they say they're doing that are showing benefits, I actually kind of believe in, right? So here's an example. Partnering with cities that are hosting big events, right? Yeah. So they did this with the Paris Olympics. They're doing it with the World Cup that's going to be in America in a couple of years. They're doing it with Lollapalooza. They go to the city that's having the event and they say, basically, partner with us. You can't house all these people with your existing home supply. Let's get some people to get their houses on Airbnb, blah, blah, blah. And yes, that's a good short-term thing for the company. But what it also does is it shows the government, or the city government, like, hey, we're great. Like, you should have us in your town. Like, this is a thing.
Let's work together, right? Because acrimony, you can't move forward through that if you're
right. And that makes sense to me. Like, that's a logical. Now, again, they have to do it, and it has to work, and all that kind of stuff. But that's just one example.
Because, like, to that point, like, think about it. If you were a local government, if you live somewhere, if you travel, you want an Airbnb. If you own a home somewhere, or you're looking to buy a home somewhere, you don't want them to have Airbnbs, right? Because you want to have access to inventory, and you don't want to have the house next to the Airbnb house, right? So all of those things come into play.
But it also, in addition to opening up a potentially skeptical government to the company, it also maybe gets a skeptical potential host to say, like, look at the dollar signs that they could get for the 3 weeks that the World Cup's going to be down the street and say, you know what? All right, I've thought about it before. This is my impetus. I'm going to get out. I'm going to put my house on Airbnb. And then they have a great experience, right? How the guests are respectful and they make a little money. And then they go, you know what? I'll keep my house on Airbnb and I'll rent it out. I'll rent out my spare room year round. So like, I get that as like a strategy. And then the other last thing I'll say, and I just want to get your thoughts, and if anyone in the chat wants to chime in, because I really don't know where I'm going to land with this, is the idea that, oh crap, I completely lost my train of thought. It'll come back to me if you start talking, but I don't know. So I don't know what to do about it. Like I haven't added to my position. I haven't sold it. I kind of want to buy, but then I'm kind of like, yeah, but maybe it's not going to work out. I mean, we have a comment here that Booking is growing faster. I get that.
Yeah. Booking Holdings.
Yeah. So
I want to say, Jeff, this is the first time in our almost 5-year relationship that you've actually said something that made me want to not talk. Having the opportunity to watch you sit there and stumble and fumble.
Except I'm smart enough to pivot away from it before I look too much like a fool. Oh, wait, no, I lost it again. Anyway, so I don't know. It's just, I talked about it before and I've changed my mind about it a little bit. Oh, I remember now. International. They're actually making some headway in other countries. And I think, again, everyone's like sort of default lame cop-out growth expansion opportunity is like international.
Yeah.
But they've actually had some success in some markets. So I don't know. That's where I am with that. What do you think? I don't know where you land on Airbnb, if you own it, or if you're bullish or bearish, or if anyone watching has a thought, but this is one I keep going back and forth on.
I think it needs to be cheap for me to buy it because I think it's fine. I think they can grow at relatively reasonable rates. It is a cash cow business, but unless they decide, you know what, we're not going to really focus all of our funds on all these other things. We're a mature business. We generate a lot of cash flow. We buy shares back. Let's pay a dividend too. Or just the market completely capitulate and the stock kind of come down. I want to see a little bit better valuation. I think it's reasonably priced. But I'm just not sure.
Maybe want a larger margin. Maybe that's the way I need to think about it, right? With the concerns I have, maybe I just need a better margin of safety.
And just and resetting expectations too. I think that's a big part.
All right, let's talk Enphase in the last couple minutes here because we got two questions from the same person, from Andrew, about it. But it popped today or yesterday. It was up big. I didn't know if there was news or what's your current Enphase thinking, Jason?
I haven't looked at the news the past couple of days, but there's some good chatter in here. But before I answer them, I just want to point out that there are some really, really good insults in here coming from Ken.
Yeah, Ken's on fire with insulting us. We can't read them all, but
it's on a roll. No, there's just so many. But I want to acknowledge them, Ken. So that's important.
That's a nice little organic plug for joining. If you're listening to this later, nice organic plug for coming and joining us live. We've had probably more people than we normally do today, which is nice. But hey, first Friday of the month or not, but at some point in the month, on maybe a Friday, we do this. So if you subscribe to our newsletter or our social media or join our Patreon, even on the free side of it, you'll definitely won't miss any messages about it. So, all right, go ahead. Enphase.
Yeah. So Snooze Button Ben, as he's known in our Discord chat, just points out that there was some new Treasury guidance from the Department of Treasury about the solar tax credits. It makes it not as bad as had originally been thought, because that's one of the big stories this year.
Yeah.
And I can't remember, I think it was maybe Andrew was talking about how so much of like the tax changes in the large luscious law that was passed are really negative, especially for solar, but not until next year, right? I think that's the big thing, is that a lot of the stuff carries through for the rest of the year. But Andrew's big question is this a permanently broken business or bottom of the cycle? So I think if you look at how much more international the company's becoming, a lot of product releases they're talking about that are happening in Europe. That's really, I'm bullish on that. The U.S.
See, that's an international story that I can buy into, because as anti-solar as this country is currently, Europe is not.
Not at all. Now, solar doesn't work as well in Europe because the latitude, right? It's so much further north. But it's still really, that business is growing, and it's not close to the size of the business in the U.S. But the one thing I keep falling back on is I think the competitiveness of solar, even with less of offsetting funds is probably better than people realize, because the utility side, utility costs have gone up like 40% over the past 5 years. I think it's like 36 or 37%. So we haven't talked about how much that cost has helped offset the loss of some of these incentives. My biggest concern about the business is the distribution model. The Sunruns and some of those big companies, those tax incentives are a massive part of their economic model, because what they like to do is take those solar loans and bundle them together and sell them to investors, and the tax credits are a big part of that. So it kind of upsets that apple cart, and it's going to be there's a vacuum in the market, and it's going to get filled with something, right? So it's going to take time for that to play out. I think interest rates maybe starting to come down is also a positive for Enphase and SolarEdge, because it makes solar more affordable, whether you're buying it or you're leasing it, because somebody's still got to fund the capital and they want to get paid. So lower interest rates, I think, are going to help. I think the business is going to be fine. I just think it's going to take a long, long time for things to play out. And I don't think the story's completely over about the federal government's role with incentives and that kind of thing. I wouldn't be surprised if we don't see something come back at some point. I'm not betting on that. I don't think you have to bet on that, but I think it could happen. I really do. I think it could happen.
Yeah. All right. Good place to wrap it up. I want to thank everyone for joining us live, and just do some quick reminders here at the end. Follow us on social media. If you're watching on YouTube right now and this is your first time, or even if you're not subscribed to our channel already, go ahead and do that. We post all of obviously these shows here, but also the regular podcasts. We do videos about stocks here and there. So all of our content you can find on YouTube. We've mentioned it a few times, very smoothly and organically, but you can check out our Patreon. You can join for free, or you can pay $5 a month and get access to our Discord and get some exclusive episodes on the side. Got a newsletter, social media. I think that's everything. Just to quickly remind everybody.
Yeah, for sure. And the free Patreon, just that, sign up for that too, because we send out occasional notes and reminders, like the reminder for the live stream. We send it out that afternoon so people know. And occasionally I'll write a newsletter. We're going to move that just to Patreon at some point in the very near future. So if you subscribe to the free Patreon, you'll get all that stuff too. Again, the $5 a month gets you the less ads on the podcast and the exclusive rough cuts that we do in the Discord, which has been a lot of fun. So I think that's basically it. John Denley calling out on the chat here, rough cuts with a whole lot of exclamation points. So those are always fun. I think we owe the people one, Jeff. We need to get one soon.
Yeah.
All right, everybody. As always, we'd like to remind you, we love to give our answers to your questions. Some of them are hard. Some of them are funny. Nonetheless, they're always our answers. It is up to you to find your own answers out there. Folks, you can do it. All right. We'll see you on the live stream next month. We'll have a podcast episode out next Wednesday. Jeff, I'll see you next time.
All right. Thanks, everyone.